Hi, everybody. Welcome to the Toronto Real Estate Podcast, your go-to source for all things real estate in the city. In this edition, we're diving into our real-time conversations with clients about the latest market trends. Today, we're going to open up the kimono and show you a real insider's industry sneak peek from the implications of the new capital gains tax to the dynamics of the urban exodus reversal. Join us as we unpack what these developments mean for buyers, sellers, and investors alike in highly uncertain times. My name is Ian Busher, and joining me, just like we do every week, this is Ralph Fox and Corey Marin, two people you know very well by now. Let's open this up and get into it. Ralph, I'm going to hand it over to you. How are you?
I'm doing fine. I feel like I'm doing better than both of you today. I know you're both hiding these colds, but you look awesome.
Thank you.
I think you're both wearing glasses, which is like the best way to hide having a cold.
Yeah, the bags under my eyes. Yeah.
Yeah, I was like, how can I go on camera? And you can hear it in my voice, actually, probably the most.
Yeah.
How can I go on camera today? I'm like, I'll wear glasses. I'll put my hair in a pineapple bun on the top. I'll hide behind the headphones, throw a lot of bronzer on. And then now I'm like as camera ready as possible. So please excuse my voice or anything ridiculous that I might say, because I definitely have a stuffy head.
And I've got a sore throat. Pushing through. Pushing through.
Because there's some type of cold or flu that's sweeping through our company. Emma on our team, as well as also at home, not feeling well over the last few days. It's like everyone got hit at the same time. So I'm trying to keep mind over matter here and seeing if I can ride through this without getting taken down.
Nice. Please do.
Quarantine
being sick
yourself.
Is never fun.
Yeah,
Don't come out of the office. Yeah.
Exactly. Well, it's a good thing that we're recording this, because I think in 6 months we'll look back on this opening and just be laughing at how hilarious this time has been for everyone. But anyways, here we are today, and the show must go on, and lots to talk about. It's such an interesting time period yet again, with so much uncertainty, so many conversations with clients about so many different things. We thought it'd be really interesting to dedicate this podcast to share with you, our viewers, a little bit of what we're seeing right now, real time, in the conversations that we're having with buyers, sellers, investors, renters. It's again, a very interesting time in the Toronto market, never a dull moment. And of course, we have this wonderful federal budget that just recently came through, which basically was a complete disaster, at least in my opinion. They reset the capital gains tax and tax exemption, claiming that it was only going to go after 0.13% of the Canadian population, which is just a farce. This supposedly is a tax on the wealthy, but if you own a second property in Canada, this is going to affect you. There are 11 million Canadians who own a second property. That's a huge percentage. I think it's over 12 or 15% of the overall population. And then, of course, there's a big reversal on capital gains exemptions for anyone who has a corporation. So if you are a lawyer, a doctor, an auto mechanic, a realtor who's incorporated, basically this is a direct hit on you as well. And it's really significant in the fact that if you are self-employed and have a corporation, you don't have a pension fund. So the only real way to save for retirement is within your corporation. And they have just levied a massive, they've gotten rid of all capital gains exemptions for corporations. This is wide sweeping, and it's going to affect basically the entire productive side of the economy, and it will have some long-term ramifications. We've gotten a lot of calls, probably I'd say 6 or 7 clients at least who've reached out to ask about this. And basically our advice has been, and this typically happens when there's a new government policy or tax, everybody panics and thinks about rushing to sell their properties or liquidate their assets or, do something crazy. And our advice has been, just hold the course. It's not a great market to be selling investment properties right now, or secondary properties for that matter, even if you own a cottage or vacation property, and not to panic and pull the switch. I think there's going to be a big change in Ottawa, hopefully in the near future, potentially with the supermajority, whereby a lot of this disastrous tax policies can get reversed. I think it's an inevitability, but there's no point in rushing to sell your assets in advance of this tax coming, because I don't think you're going to see the upside on the sale of your property, just given the current market dynamics. Cora, anything you'd like to add on that?
Well, I'm just so happy that Freeland got her new stupid shoes for that announcement. What a ridiculous thing to have to watch, like the new budget shoes. And I was like, I found it to be so not on point, considering everything that people are dealing with in this country right now.
Yeah.
And to have to watch this entire segment about her new leather shoes that she was getting for the budget announcement, I just found annoying.
She should be going to Loblaws and buying a $125 bag of groceries to sort of show that she understands what the average Canadian is facing.
Exactly. And we have had a lot of questions about this. And so our advice is to speak to your accountant about this if you have questions.
Yes.
So your agent or your broker will not be able to give you accounting advice. They shouldn't be giving you accounting advice. So if you are concerned about this or how this might affect you, please reach out to your accountant.
Awesome.
The date it takes effect is also June 25th, is it not? So you would really have to get on this today if you did want to react to it. So there's not a lot of time for sort of moving things around, just to put that out there too.
Oh, for sure. And if you have a property and it's tenanted, it's going to be very difficult to sell it. And because of the current economic climate, vacation properties in Muskoka or Prince Edward County or other parts of the province, you're just not going to see top dollar right now. And so panic selling in reaction to a potential upcoming government change, which probably will not last forever, it would be a mistake. And that's really what we're advising our clients. And never do anything out of fear. It should always be out of opportunity.
Mm-hmm.
Yeah. Knowledge, intent.
Awesome. So let's move along and talk about selling strategies. So a lot of conversations, I cannot tell you about people looking to move on or move forward with their lives despite high interest rates or despite, woes in the economy or geopolitical uncertainties. And lots of people are having conversations with us across the board about thinking about making a move, and some actually moving forward with that. But a lot of decisions into the idea of, should I sell first or should I buy first? Typically in Toronto, it's a no-brainer. You buy first because it's so much harder to buy. But now where it's probably harder to sell, the dynamics are changing, especially depending upon, I guess, your asset class.
Mm-hmm.
Cora, is there any color you would like to add to that about some of the conversation you or we have been having?
We've had so many conversations about this. So I think it really, truly does, as you mentioned, depend on your price point, your location, and your asset class. If you're a freehold, meaning you are a house, or it's all otherwise known as a low rise, I think you've got a safe bet, particularly if you're under 2 million. Mm-hmm. I think things are still very competitive. There are still buyers out there. People are looking to move up the property ladder and looking to make these types of acquisitions. So, for example, we had a detached house on the market in Plater Estates. It had over 60 private showings and over 100 people to the public open house. There was demand. There was 5 offers on that property, and it sold well beyond the list price. So that was an interesting case study in terms of how well that market is doing. Highly desirable family neighborhood, really good school district. So in demand, even at a price point that was hovering just over the $2 million price point. And then I know Ian, myself, and Ralph, we all have freehold properties on the market that are more considered to be starter or entry level, meaning they're being marketed just under that $1 million price point, will probably hover around there, just below or beyond. And those are getting a lot of activity as well. And this is where you're seeing buyers moving from their first condo up to a freehold and trying to get into that marketplace. And these are in gentrifying, up and coming neighborhoods, not necessarily the sweet spots like South Riverdale or Trinity Bellwoods or Little Italy as examples. These are more gentrifying neighborhoods. The condo segment, both on the townhouse side and the condo apartment side, has definitely been softer. So any inventory that we've been trying to sell off in that asset class has been definitely chugging along.
very lukewarm, very few showings, not a lot of demand or hype around that type of product right now. So I think sellers in that category have to be very strategic and have a bit lower expectations in terms of the sense of urgency around what they might be selling. And that is definitely where you want to be considering selling first before moving on to your purchase.
Mm-hmm.
Yeah, it's really interesting. Like we have several townhouses, which would normally be just so desirable as a hybrid between low rise, meaning houses and condos.
Mm-hmm.
And those have been really struggling, which has been super surprising. We've got a
Yes.
couple luxury condos on the market as well. Those are struggling. We've had buyers on our team, like buyer agents, doing very well on the freehold side. So there is great opportunity and people are out there actively buying. But we've seen the condo side be extremely sluggish to the point where we've pulled back. We had three other condo listings, a couple luxury condos, and then a couple one bedrooms, all of which we're pulling back now. We probably have we're probably holding on to 6 or 7 condos, and we're going to push that out to June, hopefully hoping there might be some good news on the interest rate front. But right now, it's not a good time to be a condo seller, that's for sure.
Yeah.
Mm-hmm. Mm-hmm.
And that's one of the things we've been getting is we've been getting a lot of calls from people who've got properties on the market with other agents, saying, I'm not getting any activity. Can you help me? And of course, we can't advise anybody who's under contract with another agent. And so we really don't take that conversation any further. But we're seeing those type of inquiries coming in as people are really wondering why their properties aren't selling. And it's one of the things we say up front to anybody looking to be a seller right now is it is not a sexy, fun time to be selling your property in Toronto. Ian, what are you seeing? Because I know you've got a couple properties that normally would have gone really quick, and they've been sitting on the market as well.
We did, luckily, last week sell one of them after about 45 days. So one of the conversations, I was just taking a note because I didn't want to forget either one of these things, but putting it out to these sellers, 2 different questions. Which is more important to you, a higher price or a faster sale is one, and letting them decide which one of those 2 is more important. But the other is, which one of the 2 risks are you more comfortable with if you are a buyer and seller at the same time? So I had a client where a few times I had mentioned, if you buy first, we're going to have to be really, really on top of your sale. Because you're going to need those funds. But if you sell first, and let's say your best offer has a 30-day closing, you're going to have to find something to buy or end up maybe renting or moving in with your folks or something. So which one of these 2 situations makes you less uncomfortable? These are parts of the tough conversations where we're like, we can't guarantee you anything, but which way would you like to proceed with this? Happy to advise, happy to tell you what maybe we think you should do based on the quality or desirability of your product. But at the same time, it's a tough market. It's a tough market for predicting too.
And I think maybe we should change the topic to not conversations, but tough conversations with clients, because it is really tough because it's such a difficult time right now to predict anything other than the unpredictability and uncertainty with which we are in. And so, one of the things, going back to what you were saying, and this is really important to have your client working with a really good mortgage broker, because the question is if you want to buy first, is how do you answer the question, what happens if you can't sell? Or what happens if you need to switch strategies and rent out the property? Are you going to be whole? And could you still close on your purchase? And so there's really important financial questions that need to be reviewed with a mortgage broker and maybe even, an accountant before somebody can proceed in this type of climate, because you always have to protect your downside in the event that you can't sell your property, or in the event that you may have to turn to renting it out, to waiting to a better time to go to market. So very interesting. Nothing anymore is straightforward. And then you have buyers who are running around right now with expecting, because of what they're reading in the newspaper, that they can buy a property $200,000 below list. And so, how are you seeing that, Ian, working with buyers right now?
We've touched on this subject before, but buyers can be more particular. If they're going to sell second, they're really taking their time and looking at every detail of every property. and also becoming a bit more savvy about what could I get a deal on this? Can I wait until after the offer date? Does it look like a kind of property that may not sell in multiples on its offer date? Or can we go in with a low ball? And what kind of risk is involved in maybe insulting the seller by doing that to start off a purchase? So buyers, and like I said, we've talked about this before, buyers can be a bit more picky, and the expression we use is buyers can actually get a property they like rather than just something they can get.
Mm-hmm.
But the inventory is still quite low, even though buyers are being pickier. So it's tough for them. They're being picky. There's not much for them to look at. Some buyers that might have been done within a few weeks because there was a whole litany of product for them to look at are now taking months because there's just nothing to show them. I check in Monday, Tuesday, Wednesday. I check in all the time, but early in the week when the new listings come out, and maybe by Wednesday, I can almost predict sometimes that I'm not going to have any showings with these particular buyers this weekend because there's nothing they'd be interested in on the market this week.
It's hilarious because a lot of time, like in a time like this where there's such tight inventory, we set our clients up, we curate the listings that we send them, obviously, but we also have them set up on an auto send within their parameters. And it's times like this that sometimes a buyer will write to us and say, is my auto sender working? Like, I'm not getting anything. And you're like, well, that's because there's
nothing
in your parameters. Cora, what are you seeing?
I find it really interesting just to see the feedback that we get on their listing. So I focus more on the listing end versus the buying end, and to get the feedback from the buyer agents. I mean, we've never experienced such particular commentary before. Like, oh, the pictures are nicer than it was in real life, or, ooh, the kitchen needs to be renovated, or, oh, the bathrooms are dated. And like, okay, yeah, like it's Toronto. This house is a century-old home. Like the price point reflects this. Like, I don't understand what you expect. And I'm just so amazed by the change in tone from the buyer agents and their representation of the comments coming from their clients, and just being kind of like a little rude sometimes. Like, I'm just like, oh my gosh, this is totally shifted and much more particular. And then when we see offers coming in, I mean, there's way more demands in the offers from the buyer's lens than ever before. Like, things need to be fixed before closing, and home inspections need to be done. And then when the inspection happens, then we have to fix the things in the inspection. Like, none of this was happening a few years ago or ever in my career. So I am finding this all very interesting. And definitely challenging. And as Ralph mentioned, not as sexy for sellers right now. And buyers, oh my gosh, you've got, I mean, maybe not on the freehold side, but on the condo side, you've got opportunities right now. Like, if you want to get into the market, like, get out there. There are like definitely some awesome condo opportunities and condo townhouse opportunities for you. This is your time, people. Get out there and go buy yourself something and negotiate, and you will have some very interested sellers trying to work out something that's fair for both sides. So condo buyers, get out there and start hunting. This is an exceptional time for you to get something done.
Agreed. And are you seeing in sentiment that people are waiting on the sidelines to see what happens with interest rates?
I think it's interesting, because I keep having this conversation with multiple people, that at the beginning of this year, it seemed like somebody flicked a switch on January 1st, and there was a lot of buyers who were like, I am just sick of waiting. So my interest rate's going to be higher. I can't wait for it to come down. I'm going to make a move. I'm going to jump in. Now that we're sort of we're talking mid-April right now, late April, when we should be in a really hot spring market, it actually seems to have cooled a little bit right now, which is really odd. So the predictable seasonality is gone. Now that April didn't happen, is maybe people are waiting for June, or maybe that little blip of buyers who are like, I'm sick of waiting, have bought. And we've sort of worn out that little trend. So it'll be interesting to see, because speaking of seasonality, summers are typically quiet. But if we get a June and or July interest rate drop, the summer might be crazier for realtors than we're typically used to, where it's usually a dead zone because people are vacationing and distracted and dealing with the kids out of school.
Since COVID, I don't even believe in seasonality anymore. There are so many things outside of the market impacting the market that I think the idea of seasonality is no longer in play, at least to the degree that it used to be. Obviously, weather and school and camps and stuff like that impacts it. But at the end of the day, if we saw a 50 basis point drop in June, we'd have a very busy summer.
For sure. Yeah. And a crazy fall market, probably.
And
An
it's
insane
interesting
fall
because
market.
2 Junes ago, so 2022, we saw a full 100 basis points increase by the Bank of Canada. And then they paused for the first half of 2023, and the market was super strong. And it was those last 2 raises in June and July of a quarter basis points that really messed the market up. And I think if we unwind that 50 basis points in June, July, August, September kind of range, the signal will be very strong as much as the financial aspect to it. Because when the bank said that they were going to pause for the first half of last year, the market shot up. Just imagine if we start to unwind again. And I think people just need a break.
I also think just in general, beyond interest rates, people are just fried. Things are expensive. Inflation is really affecting everyone. The political climate's affecting everyone. People are very aware of what's happening globally. People are watching the stock market. They're watching the bond market. This is stuff that the everyday man and woman is paying attention to more than ever before in Canada. And I think people are just feeling exhausted. It's just exhausting to go grocery shopping. It's exhausting to fill your car with a tank of gas. It's exhausting to watch the news. It's exhausting to walk on the street and see somebody like a homeless person having a fentanyl high. It's exhausting to be on the Gardiner Expressway when they're doing this repair work and, more construction or lack of construction and potholes. I feel like everyone's just fried in general. And so I definitely think this is interest rate related, but I think people are just am I just done with city living? Am I done with living in Canada? Am I ever going to get anywhere? I just think there's a sentiment overall at every different age category and demographic and area of living that people are just having these conversations and they're just what the hell is going on? So I think that is affecting the market. Yeah. And I can understand why.
Psychological toll, 100%.
Totally.
Yeah.
Yeah, I think it's interesting. I can't remember who, it might have been Ronald Reagan, but they called inflation the silent killer. And it really is a silent killer because going to Loblaws and spending $125 for a bag of groceries isn't really that big a deal. But when you're doing it once a week for a year and a half, it starts to become a big deal. When everywhere you turn, everything is more expensive and your buying power is shrinking, it just starts to affect everything. And it's one of the things that's so interesting with what you're saying, Cora, is we have never had so many properties or situations with clients where the word divorce is in play or situations where lawyers are involved. And it's just a sign that people are under a lot of stress and duress, and you're seeing it everywhere. And real estate is one aspect of how it's playing out, but we're seeing it really, really, really across the board right now. And I think people are pretty exhausted. And I think people really feel like they need a break.
They do. They need a break. They deserve a break.
I know. A vacation would be nice. Can we go on one?
Yeah.
Okay.
Yeah, we'll try one of those one day.
Yeah, perfect. Tenanted properties. So this is a real issue, and it's in conjunction with clients calling us about listing their properties because of the capital gains and needing to sell by this and this date. We've got a lot of landlord investor clients who've called us up, and we're telling everybody, just hang on, just calm down.
Including ourselves.
I was just going to say the same thing, including us.
Yeah, exactly. Mark, do you want to lean into that a little bit about some of those conversations we're having without going too in depth?
If you have a tenanted property, first of all, I think there's just a misnomer, and we've talked about this on many podcasts. You cannot kick your tenant out to sell your property. So there is a lot of red tape when it comes to that. And we can talk about that on another podcast about how to deal with that. But basically, like, it's like a cash for keys scenario, because selling your property tenanted is almost impossible in this market right now. Means A, it's not going to show at its highest and best, and the buyer most likely would need to assume your tenant.
Or evict your tenant if they're going to move into it.
Exactly.
And there's inherent risk involved with that. It is
Exactly.
not clean.
It is not as clean as everyone thinks it is, or for those that are not astute in selling their investment properties. This is not a good time to explore that option right now. You are so much better off to wait until the market rebounds, and it will. It will. I don't know when it will, but it will. And so you just gotta like be patient. And like Ian said, we're all having conversations with our own selves and our own investment properties that are tenanted. So hang on a little longer. This is not going to service you in the long term to try to dump a tenanted condo specifically at this point in time.
Mm-hmm. Yeah. Think long term.
Yes. Just over and over.
Exactly. Amen. This too
shall pass.
Yes, this will not last forever, and you just have to keep reminding yourself of that. And then we have a lot of geographic conversations.
Yes.
One of the things that I've never seen, and it's leaning into what you were saying earlier, Cora, is there are so many people who are so frustrated with the direction of the city and the direction of the country that we're talking to more and more people who are talking about or considering the possibility of leaving Canada altogether.
I know.
Yeah.
Now, where they're actually going to go that's going to be better, I have no idea, because I haven't really seen a better argument as to where they're going to go. But it's definitely something I've never seen before, or even personally myself thought about before. But more and more, it is becoming a conversation with other people as well as with ourselves. I still believe that we're blessed to be living in Toronto and Canada at this point in time, but things have not been trending in the right direction for a number of years, going back to what we were talking about earlier. And so these are conversations that we are having, and there are people who are looking at making these types of moves.
Yeah, absolutely. I think a lot of them are younger than us as well, right?
Yes.
People who are looking at spending the next 30, 40, 50 years working. And they're like, with the price of real estate here, the price of goods, the way things are going politically, the economy, is this where I want to set up camp? Or is now the time for me to set up a new camp in a new town and begin a new life with my partner, maybe my partner and child, and look for somewhere else where employment opportunities are good, economic conditions are as good or better. That's what I keep hearing too. There's been a few conversations with people of all different ages, but largely young people who are like, this is going to be some heavy lifting to stay here.
Yes.
Yeah, like the Gen Xers or the baby boomers, they're pretty much fixed here. But if you're a digital nomad and you're young and you're in tech and you could literally work from anywhere in this new dynamic or this new economy, then options are open. And I think it's only reasonable to start thinking about alternatives for sure.
Mm-hmm.
Cora,
Mm-hmm.
I think I might have interrupted you.
Oh, no, I would just say that most people that I've had this conversation with have been exploring moving to the States. And which is so weird because if you think about it, like when Trump was elected and during COVID, everyone was like trying to figure out how to get to Canada. Mm-hmm. And like, didn't like the government site crash or something because there's so many people searching how to move to Canada. And now I have a lot of people in our age category that are very well established and they have some means and they have the ability to possibly move from their corporate job in Canada to an entity in the US. And are trying to transition to the US because they feel like there's more opportunity for them and their families there, which is something we've never talked about. We've always been like, oh, thank God we live in Canada and we're not forced to live in, the US. And so that is definitely a huge reversal. And there has been some conversations with people about moving to Alberta. Do love the premier there. I have to say she's pretty rock solid. And for opportunities in Alberta. So that's been another conversation. It seems like BC and Ontario are the two provinces where people are just feeling like the most frustration due to the cost of living in both of Vancouver and Toronto, I would say.
Generally, like I see the conversation starts with, if there's not a change in the next election, ... However, looking at the states and, looking at their political climate right now, there could be some serious civil unrest in that country in September leading into the next election. And after the next election, there's a lot of people thinking that whoever loses, be it the Republican or Democrat, are not going to accept the results. And if that happens, we are talking about a country with 75 million registered gun owners, 25 million registered with semi-automatics, and a propensity to use them on occasion. So, there are certain benefits to being up here in nice, boring Canada.
Yes.
And I think the grass is always greener on the other side. So it's really important to look at these types of considerations. And I think it's also equally important to notice that for the first time in my lifetime, I'm having those types of conversations that I never have had before. And it's just interesting to watch this sort of unfold.
Mm-hmm. I agree.
Ian, anything you'd like to add?
Nope. Just going to throw out there as well. The tornadoes, hurricanes, and earthquakes that plague the U.S. that we also don't have here in Canada. Totally separate from real estate and everything else, but it's another factor.
But the carbon tax is going to keep that at bay up here in Canada sure.
Yeah.
That's what's going to fix it.
We'll bribe those tornadoes to leave us alone.
Yes.
It's a net positive tax, and we're all just going to get credits. Have you guys I've never received a rebate.
Never received a rebate.
Just wondering.
Apparently my dad received a rebate, he told me.
But he's not sure.
See
but he's not sure how much or when. That cracks me up. And then the other thing that we've sort of talked about is we are seeing people who left the city during COVID all of a sudden coming back in droves.
Or trying to.
Yes.
Yeah.
Yes.
It's tough.
That would be so hard. You sold your asset in Toronto, then you moved out to a smaller area like Guelph or Hamilton or something. Yeah. And then now you're like, oh God, I don't want to live out here.
Oh my God,
and then you want to come back.
Uber Eats out
or my
here.
office is making me come back 3 days a week and the commute is killing me. Yeah.
Yes. Yeah. And then to try to acquire something here, it would just be brutal. It would be really challenging unless you're buying a condo, townhouse, or a condo. Then
we might have something for you. Call us.
Call us. We're nice.
Yeah.
Oh, that's funny. Okay, I know we're jumping around here. We've also seen a dramatic softening in the rental market, which is really interesting. We've seen rental softness. We've seen prices dropping. And we've seen more inventory on the market. I think a lot of millennials and younger people are retreating back home in this inflation economic time of uncertainty. So we're seeing probably less demand, which is really important to understand. And we are also seeing, I think we hit a peak with just how the numbers make sense. I mean, you have to make $80,000 to rent a one bedroom in downtown Toronto to be able to qualify, which is just, it's crazy. So, I mean, the market can only bear so much before all of a sudden incomes just can't keep up. And I think that is also a bit of exhaustion that we're seeing in this recent run up in rental rates. We're seeing that come back down, and the rental market is struggling right now.
Mm-hmm.
Yeah. If I was a young person, I could live at home, I would for sure live at home. There's no way my brain would be like, oh, I'm going to spend $2,400 a month on rent to live in Liberty Village so that I can live off of, I don't know, peanuts and chips for the rest of the week because that's the only money I have left over after paying for my costs. No way. Yeah, if I could live at home at that age, I would have lived at home for sure.
Yeah. Yeah, it totally makes sense because if you are someone who would qualify to get one of these apartments with an $80,000 income, if you have the opportunity to live rent-free and bank some of that, it wouldn't take you very long to have the down payment so that your monthly mortgage rate kind of matched what your rental charge would have been.
It actually would take a long time. There's a study that I read by Zoocasa that came out, and they looked at if you have an average median income of $80,000, how long would it take you to save up $200,000 to buy a $1 million property? 39 years.
Wow.
Yeah, but you're living at home will be a huge advantage.
Still.
And I was actually thinking about
20
buying
years.
a $600,000 condo to get started. That one bedroom that you were going to rent, not a $1 million home.
Yeah.
So that softens it a bit, but I do get your point, Ralph. It's like
17.5 years.
Stop ordering the avocado toast, make it at home.
Get a second job.
Stop getting $7 coffees, make it at home.
And when you're living at home, be really nice to your parents.
Yep.
So maybe they could help top up your
down payment,
deposit, because that's really the only way young people can be buying right now.
Just inherit the house. Put your parents in the $2,000 a month condo.
If I was a young person now, like I know somebody's going to be so annoyed with this comment, so I'm like already prepared for it. But the smart thing to do would be to try to find a studio, under 500,000, where you only have to put down 5%. Like that is like the most brilliant thing that you could possibly do. And like there are some really cute studios. You'd be living in an amazing location, and you could start paying down your mortgage, paying yourself. Like I could totally, as a 20-year-old, lived alone in like a really awesome little studio apartment. And that would be, I know it's not optimal and it's not what your parents got to do or your older sister got to do. It's not forever. It's just a starting point. And if
it's your first rung.
Exactly.
Right? On that property ladder.
This right now, there's like a lot of these little guys out there. 5% is not insane. Like you could pull it off. You could do it if you really wanted to. So that would be my recommendation. If buying real estate, and if you think it's out of reach, that's where you'd start.
Property ladder is a real thing.
It is.
It just might mean delayed gratification.
Yes.
Which is a real problem in society these days. Talking about delays, let's go into the pre-construction market, which is absolutely deader than dead. We're going to sales volumes back to 20 years ago when Toronto was about almost half the population or something like that. So nobody is buying pre-construction. And logically, it makes sense because the cost for a developer to profitably sell a property or project is at about 1,600 square feet in downtown Toronto. Meanwhile, you could buy something resale today for $1,050, $1,100 a square foot, maybe even less, depending upon when and where. So developers are pulling back, and we're seeing a massive pullback on marketed properties. So this is really important to understand because of the long-term impact on the market for supply, because predominantly new pre-construction sales are what is going to be coming online 3 to 4 years down the road, as well as if you're buying at $1,050 a square foot, the replacement cost is going to be $1,700 a square foot for the future pricing. So it says a lot about where pricing is going to be going. And I think it's important to understand why the pre-construction market is struggling. I think it's important to understand that in general, pre-construction doesn't make sense the way it has in the past. And that's why you're seeing developers pulling back on upcoming projects. And they're like, we're going to take our foot off the gas and we're going to wait to a more opportune time when it makes sense to go to market. But if you're a condo owner, if you're looking at buying a condo or investing, it's a bit of a contrarian bet right now in a high interest rate environment. But if you have a bigger down payment, 30%, 35%, 40% if you're an investor, or if you're even a first-time buyer and you're trying to figure out what the future of a condo prices looks like 3, 4, 5, 6 years down the road, it's going to get a lot more expensive. And so don't believe the hype. If you are an investor, contrarian investors are always the ones who do the best. And if you can have high conviction, if you look at the fundamentals of the market over the last 20 years and realize that other than interest rates, those haven't changed, it starts to become a very compelling argument for why owning or buying or considering buying in downtown Toronto makes a tremendous amount of sense.
Totally. And this very topic is the motivating factor for why I want us to keep our condo portfolio strong now. Is because I know in 4, 5, 6 years, our supply will have completely dwindled because pre-construction and new construction is just at an all-time halt right now. And so I'm like, I just know it's going to add up down the road. It's just, again, it's that short-term pain, but it's going to be for long-term gain. So I just keep reminding myself of that every time I feel like frustrated by the interest rates or the fact that some of these properties aren't cash flowing or like the maintenance fees increased or whatever it is. I'm like, no, hold, because supply is going to dwindle big time in this asset class. And it's not that far away. Mind you, I will be in my 50s. Oh my gosh, when that happens, but there'll be payoff down the road.
Agreed. Let's talk about our colleagues, realtors.
Yes.
And how much stress is going on right now. I saw a stat where, you're looking at the same amount of transaction volume as in, I think it was like 2005 or something like that.
Wow.
At the time, there were 17,000 realtors. The city has tripled, and now there are 75,000 realtors. So very few. And if you look at the stats and see the breakdowns of production in brokerages, in teams, you see how much people are really struggling. We as our brokerage, it's unbelievable where you see agents calling us every day, outside agents where we have represented a landlord in a rental, freaking out how they need to get their $500 check and they'll come pick it up because they really, really need the money. And some of these are bigger agents. It's really, really surprising to see in this environment. So I think a lot of agents are not doing well financially, and you see that in their behavior. I also think you see even a lot of the more successful agents really stressed out because it's very stressful having to have these conversations and having to try and navigate your clients and be their fiduciary through these type of environments. Cora?
Well, I just think agents have been spoiled in Toronto for so long that a lot of agents just don't even really know how to work hard or have difficult conversations. And they're like, oh my God, what does this mean? I've just been used to being able to slap a listing up on the market and on MLS and get multiple offers and sell above list and not even bother with staging or good photography or pricing strategy or having any negotiation capabilities or knowing what I'm doing. So sorry, like I have sympathy for some of these people, but like the lazy ones that have never actually like rolled up their sleeves and done anything difficult, like I'm sorry, it's going to come around and bite you in the butt. And this is a good example right now, whether you're a selling agent or a buying agent or a hybrid of the two, there is still opportunity out there. It's just not as like, I'm not going to even use the word easy because this job is not easy in any way. It's not as fluid as it was. And so I think that if you're willing to have difficult conversations, being very transparent, being super honest, bringing a lot of value, going over and above for your people, there is still a lot of business to be had and a lot of amazing clients and opportunities out there. And if you're not having those, then I'm sorry, you're just not working hard enough. You're not adding enough value.
Yeah, the role of being a therapist to every one of your clients is so much needed, so much more now than when times are fluid. That's a great term for it. It's a very, very bumpy road, and you've got to deal with managing expectations, disappointment, anxiety around what's going to happen. Be a brilliant strategist when it comes to order of operations. How are we going to lay this out so it works for you? Predicting the bumps in the road. What happens if this doesn't happen? What happens if this doesn't go the way we want it to? And what are we going to do? So I don't know if you guys have ever driven through the Rockies. Have you ever done that?
No. Yeah, it's gorgeous.
Yep. What I'm going to make an analogy to is some really steep downhill curves. On the upside, the highway goes back up again, but there's also an alternative ramp that 18-wheelers can take. So if they basically lose their brakes, they use this exit ramp to stop themselves rather than using the highway. And it's sort of like that. We need these, if this doesn't go the way that we expect it to, we need these alternate exits. How do we, take a left turn here? There's going to be multiple forks in a very bumpy road, and you've got to be ready for that.
Yeah.
And lots of
speaking-
realtors are not.
They're not.
Speaking of driving through the Rockies, if you drive from Calgary to Banff on that highway there, they have these bridges where animals can cross.
Yeah, over the
And-
highway.
Yeah, and I have no real reason to bring that up other than the fact I think it's super cool that you
It's
have
brilliant.
these, like, animal bridge highways.
Yeah.
And if you see the at night, it's just amazing. But I think going back to real estate, it's a pros market. I think that anybody who is considering hiring an agent is going to be highly considerate. It's not the type of time or market where somebody would ever consider hiring their cousins, brothers, uncles, friend
Newbies.
who just
Yeah.
got their license, or somebody who just bullies people into hiring them in their neighborhood. People are very, very considerate right now.
As they
And
should
so,
be.
for sure. And so for us, we're having our best year ever, but it's definitely been a lot of work and it's been a lot of emotionality. And it's a strong message to people who are in this industry that if you can't add more value than anyone else, you're going to lose. And so I think that's going back to what Corey was talking about having no sympathy for people who think that they can get by without serving their clients as their number one mantra. And
You need a different toolbox than we used to use.
and you have to be a team. Like, an individual agent just cannot compete or keep up with the ability for a good team to add the infrastructure and experience and client experience across the board. And that's why you're seeing teams and mega teams picking up most of the market share in an environment like this. And if you're talking about real estate trends, that's certainly something I would expect to continue. And the other part of it is that it's really good to have that support network as an agent with people who are on the same team, working towards the same goals with the same set of values, because it's a very lonely business and it's getting lonelier and lonelier with the highs and lows that we're having in this uncertainty period. And going into what you were saying, Ian, being able to onboard all of the emotionality and therapy that goes with being an agent is multiplied by 100 now. And so having people around you to be able to talk to, vent with, brainstorm with is just super, super important.
You didn't bring up that bridge over the highway for no reason. That's basically what we're using to get people safely across.
There you go.
That's us.
I knew there was a reason.
Yep. The more skilled agents are not taking the main highway. They're finding ways up and over to get their people safely across to the other side. Sorry, Corey.
Yes. Oh, I was going to say, I mean, what were the three of us all doing last Friday at 6:30 in the morning? We were at our staging warehouse, making sure that we were picking up some extra items that one of our sellers needed. And all three of us, with coffees in hand, were like schlepping the stuff, moving it in, and making sure that the house that we were listing met brand standards. And that's probably why Ian and I both have colds right now, because we're like, I guess we're going to be stagers, movers, designers, and everything else in between today. And that's what we had to do. And we actually, it was kind of fun in a weird way, but
Just like selling Sunset.
Just like selling Sunset. But I'm just saying, all in whatever it takes as a team, no ego, rolling up our sleeves and getting shit done. And I actually really respect all of us for doing that. Absolutely zero ego. This is just all about making sure that we delivered on what we promised to do.
Yep. And it was a very long week. That was just one thing that was.
Exactly.
Awesome. So we're getting close to the end of this conversation, which has been actually really fun. I'm going to go around the group here. Predictions. June Bank of Canada announcement. Ian.
I think we'll get one, June or July. I certainly hope that we will. Like I said, I think that might make the summer a little busier than it typically is. But it's certainly, if it doesn't do that, it most certainly will make the fall market hot, hot, hot. People have basically just been reacting to the sentiment that things are going to get better and coming back slowly. So when someone actually takes action, when the Bank of Canada actually takes action and does a thing, then a lot of people will follow suit and jump in. I'm not saying that that's my prediction. It's kind of a bit of a hope. There's also talk that they're going to keep their foot on the neck of inflation for a little longer. So back half of this year might be unpredictable. It might, we might have a little more like the back half of 2023, which was very cold and very quiet.
Okay, stop giving me a political answer. What's going to happen in June?
Okay, so in June, we'll get one. In July, we won't. The summer will be sketchy, and the fall will be great.
And how many more decreases, or will there be any in the fall? Like by the end of the year, from here to there?
It's a great question. Another one in September would be amazing. I think they'll do one, and then it take at least 6 months to wait and see what that gets us, that we don't end up over like steering back right into craziness.
I think we'll get a sliver in June or July, like a sliver, a little something, something. And then I think we'll get a nice healthy-ish drop in the fall. And then, they'll pull back again, not pull back the other way, but just like
stop,
take the foot off the gas. After that, hopefully something happens in the fall. But I'm really hoping and believing that there'll be a little something for everyone to chew on in June or July.
Awesome.
What do you think, Ralph?
I have no faith in the Bank of Canada doing the right thing. If you look at their track record over the last 3 or 4 years, they have been wrong about absolutely everything. If you look at important indicators like GDP per capita, which has been trailing for 8 quarters in a row or whatever it is, if you look at employment and you take away the growth in public sector hiring, you'll see a failing employment rate. If you look at productivity, you'll see the Bank of Canada, even themselves, warning that we're at emergency failing levels of productivity. If you look at all the indicators across the board, aside from, the facade of GDP, what you'll start to see is our economy is breaking and people are breaking. I think there is some intent by the Bank of Canada to inflict as much pain as possible. And if they're going to overcorrect, they're prepared to do that. I think they've already done that. I think they need to pull back significantly. If you look at RBC, CIBC, TD, they're saying the banks should be retracing by about 125 to 150 basis points. If you look at the fixed market and the bond market, they're going in the opposite direction. I think people need relief.
Yes.
I think we need a change in sentiment. So I believe that we should see about 75 to 100 basis points this year. I don't know whether they'll do that. And I really don't believe that they're going to do the right thing, which is probably 75 to 100 basis points. So I think there'll be more pain. I think there'll be more miscalculations. And we'll just have to sort of wait and see. I heard a great analogy of, imagine a clown driving a golf cart and they're on a subway line with 2 electrified guardrails and they just keep bouncing off either side. And when you try to drive an economy like a Red Bull trick plane and bring interest rates down and then shoot them back up and then bring them down again, the economy just can't handle it, especially in Canada where we have a max of 5 years terms on mortgages, unlike the US, which can extend to 30 years. And the problem that the Bank of Canada has is if they start to decouple from the Fed and start to decrease rates, it unfortunately will impact the value of the loonie, which has been dropping, which in turn becomes inflationary. So it's a tough spot that they've put themselves in. But I do think that we're going to need to see some decreases. And my hope and prayer is that it starts to happen in June.
Oh my gosh.
But I will bet against them doing the right thing. And I think they're going to kick the football field and try to inflict even more pain. But they are talking a little more dovishly, which is helpful. But I think they're going to push. And I hope I'm wrong. I hope
you're wrong too.
I hope you're wrong too.
I really hope so.
Come on, Ralph.
I don't think they're going to do the right thing because they haven't done the right thing yet.
Okay, well, I really hope you're wrong. We'll see.
We'll see is right.
And June's not that far away anymore.
No, it's not.
No.
So
let's go.
Summer's creeping up.
Yes.
Exactly. Bring some of those condo listings in our pocket back out to market.
Yes.
Anyways, I think that's a great conversation, and hopefully we've added some value to some of our viewers who are tuning in today.
Mm-hmm.
Definitely an interesting time in the market. Is there anything either of you would like to add?
No, I think this has been a great conversation.
For sure.
Yeah,
It's been
I think
fun.
that was a great way to wrap it up, for sure.
Ian, would you like to bring us home?
Sure. Thank you for tuning into the Toronto Real Estate Podcast. We've covered a range of critical topics, from selling strategies to navigating the complexities of the pre-construction landscape. As the Toronto real estate market evolves, stay connected with us for expert insights and advice to guide your real estate decisions. Corey, what should people do?
Oh, well, they should contact us anytime they want to because we're super nice around these parts.
Indeed, we are. And Ralph, what else should people do?
Be sure to hit that subscribe or like button. And if you have any comments, thank you so much for tuning in. As long as they're constructive, good, bad, ugly, we'd absolutely love to hear from you.
Awesome.
Thanks,
you
guys.
so much.
Thank you.
Ian, I hope you feel better.
You too, Corey.
I hope you both feel better, you and Ian.
Don't get sick,
you.
Ralph. It's terrible.
No, I'm not.
All right. Take care. Bye.
Bye, everyone.
Bye.